You just realized your business needed to hire someone yesterday. How can you find amazing candidates fast? Easy. Just use Indeed. Stop struggling to get your job post seen on other job sites. With Indeed sponsored jobs, your post jumps to the top of the page for your relevant candidates, so you can reach the people you want faster. According to Indeed data, sponsored jobs posted directly on Indeed have 45% more applications than non-sponsored jobs. Don't wait any longer. Speed up your hiring right now with Indeed. And listeners of this show will get a $75 sponsored job credit to get your jobs more visibility at Indeed.com/kidsandfamily. Just go to Indeed.com/kidsandfamily right now and support our show by saying you heard about Indeed on this podcast. Terms and conditions apply. Hiring? Indeed is all you need.
Are you ready to learn the 3 secrets to launching a successful podcast? Hi, I'm Bill, a recent client of the Podcast Mogul. If you've been thinking about starting a podcast but aren't sure where to begin, he's got you covered. He is hosting a free webinar where he will share the 3 secrets that can help you launch, grow, and monetize your podcast without any fancy equipment or technical headaches. Click the link in the show notes to save your spot now and let him help get your podcast off the ground.
Welcome to Invest in Yourself, the Digital Entrepreneur Podcast. Join the podcast mogul Phil Better as he interviews successful entrepreneurs that make their living in the digital world. Now, let's join your host, Phil Better, and his special guest today on Invest in Yourself, the Digital Entrepreneur Podcast.
Welcome back to another exciting, insightful episode of Invest in Yourself, the Digital Entrepreneur Podcast. I'm, of course, your host with the most, Phil Better. And today we have a guest whose mission is to empower individuals to take control of their financial futures. Our guest today is a seasoned software developer with over 2 decades of experience and a deep passion for data analyzing and investing. Recognizing the potential for individuals to outperform to traditional mutual funds, our guest founded Ditch Your Fund, DYF, to help investing. Leverages value investing principles and consistent growth analysts to identify promising companies, helping users make informed investment decisions. His innovative approach distills complex data into user-friendly scores, making investing accessible to everyone, regardless of their financial background. With a focus on simplicity, transparency, and community engagement, DYF not only aims to help individuals manage their finances independently, but also creates a supportive community of like-minded investors, and the results speak for themselves. DYF has outperformed the S&P 500 in backtesting, showcasing the effectiveness of our guest's methods. In today's episode, our guest will share his journey from software development to founding DYF, his insights into value investing, and how DYF is helping people take control of their investments with confidence. So if you're ready to learn to manage your finances more effectively and join a community of empowered investors, this episode is for you. So please join me in welcoming the visionary Bryan Stockwell to Invest in Yourself, the Digital Entrepreneur Podcast. Bryan, thank you so much for being here.
Thank you, Phil. Glad to be here.
All right, Bryan, I'm going to start off with the simplest question I always do. Why did you leave the corporate world to found DYF Investing? What made you decide to go into the entrepreneurial world?
I guess, the real kicker for me was, well, one thing, my company at the time was laying people off. And I thought, you know what a great opportunity for me. So I saw it that way. And the other thing was, I didn't want to die with regrets. So, people always talk about doing something in their life, but, it's hard and it's scary to kind of take that leap. But I didn't want to regret things. So I'm like, you know what, if it doesn't work out, it doesn't, but it's something I've had a passion for a long time. And I just wanted to take that step.
Now, with you going into the entrepreneurial world, did you have people in your life that were entrepreneurial beforehand, or were you like, you're the first brand of your family deciding to show off the shackles of corporate world?
I would say within my family, probably. Yeah, I don't think there's any other entrepreneurs within the family. Within my community, though, I've had several friends that actually had done startups. They warned me against it. They said it's not easy, but they also said it's extremely rewarding when it pays off. So I'd have had some kind of experience. I've had a couple of mentors as well that have really helped me kind of gain perspective on things. So all in all, yeah, I've had a few mentors here and there to kind of help me out. So
I love that. And what was it about investing that you wanted to help people with specifically? Why did you go into like the investing world? Because it's not known for the entrepreneurial ventures as much as personal branding or copywriting. Those places generally have more entrepreneurial ventures than investing. Investing seems to be more of a corporate type enterprise.
it does. It does. I mean, it kind of comes back to my original emphasis, which is to kind of empower the average investor. I feel like those are the people that get left behind. It's basically you have the third grade school teacher, with just a small savings or a small retirement account, who really doesn't understand a lot, who doesn't make a lot of money, but you definitely would like to see him or her retire cleanly. It's about a lot of the people that just don't quite understand that. I just feel like that really makes it kind of skews everything towards wealthier people. And I feel like trying to simplify investing, making it so that you can see returns of 15-20% as just, Joe Smith on the street. That to me was really kind of like what brought this, that's where my passion really lies, is trying to really bring that to those people. And honestly, the journey I've taken my own, I just realized it is very doable. It is very possible without having a master's in finance.
Yeah, that would take a few years to get that master's in finance, and no one has that time or the money to go through with that. Was there a moment while you were on your journey that it clicked right away who your ideal person you wanted to help was? Or was that something you learned along the way? Like, did you always know you wanted to help the smaller investor, the retail investor, which is a term that just popped up thanks to, the Redditors of investing?
Yeah, I would say this. I had a corporate job like everybody else, and I would watch my 401k, and and everything was in mutual funds. And mutual funds, the way the 401ks are typically set up, is they don't allow you to trade on your own. Typically, what they do is they say, okay, you can pick from these 10 funds, or you can pick from all these funds and do that. And then after time, I'm realizing, not seeing my retirement go up. I'm like, kind of what's going on, and so I started looking deeper. That's when I realized, like, a lot of these guys, how the fees are charging for zero performance or negative performance, regardless. And then they're basically underperforming the market. When I say the market, I mean, like, if you look at like the S&P 500, which is basically a sample of 500 stocks on our stock market. That's kind of the benchmark, and those people can't do as well as the S&P 500. So, learning this, I kind of changed my tune with how I started investing at work. And then I asked to do something called a self-directed account. And then that's where I started trading my own retirement through work. And I just realized, this is very doable. And I think that's where the name came from too, is Ditch Your Fund, because the idea was that, mutual funds really aren't, they're all cracked up to be. I think it's kind of a bit of a marketing ploy from a lot of these financial advisors, so I think that's what I'm trying to do, is kind of like instill upon people, like, here's the facts of the matter. Bottom line, if I were going to do this again and I didn't want to invest, I would invest in just an index fund, because that would even do better than some mutual funds. So that's kind of like where my journey started. And that's kind of the point where I kind of said, you know what, that's the people, those are the kind of people that I want to attract. So,
did you always have an interest in investing, or was this something when you more along the lines of, okay, my 401k and my retirement are looking bleak, I need to take control of this, and then you started learning about the the stock market and investing and finances and all that, or was it something you were always interested in?
Well, I will say this: I'm a software developer by nature, so like I have this kind of this engineering mindset, And so initially when I started doing this, I was very much about just technical analysis. And so I thought, okay, hey, I'm just going to have fun as kind of a hobbyist, play around with just, momentum indicators and things like that, just try to trade. Um, the problem is long-term, it's a lot of work for one, because you're essentially, you're daily, you're kind of looking at things. And two, it's a little bit of a chance, it's a little bit like gambling. Um, where I thought, you know what, I want something that's a little more long term, a little more robust, and that I don't have to sit there and watch every day. So that's where I kind of found this whole value investing thing. But I've been doing this for a very long time. But I started out, like I said, doing technical analysis back in like in the 90s. So.
Ooh, back when before the first big bubble of the internet popped up.
Yes, exactly.
With creating your own, being a software developer and then creating this ditch your fund investing, what kind of common issues do you see from your people you're helping, your community that you're helping, when it comes to investing, when they first find you, Bryan? Like, they're like, oh, this guy actually helps everyday people, not get screwed by their mutual funds or their investing strategies. What are some of the initial issues or headaches that ordinary people face when they come see you?
Well, I think the primary issue is that people just get very confused. One of the reasons why I'm trying to be different is the majority of sites out there, it's not a very good term, but they vomit data on the screen. And so what happens is people are just see all this data and they have no sense of context. They don't know what means what. They have no idea where to go or what anything means. They said, well, some guy says, look at PE ratio. Some other guy says, has the earnings per share, has it gone up? Or, there's all kinds of different things people will look at, but there's no true context and nothing to kind of solidify a program or a process for them. And so I'm trying to get to a point where I can take someone's level of education, understanding, and kind of guide them through the process and try to make that a simpler and easier approach. Yeah.
Simpler is usually better for us who are already like masters of our own domain. We don't need to become a master of another domain because it's going to take years to understand the stock market. Look, most stock market people don't really understand the stock market because there's multiple different ways of investing. I love that you're simplifying it for the everyday person, the non-wealthy and non-financial, literate people. Not that they're illiterate, but understanding the stock market is a completely different index, if you allow the pun. How did you come up with the name? Like, the name is very interesting because it's kind of like done yourself. It's kind of like a done for yourself investing.
Oh yeah. Like
DIY.
DIY. Yeah. Could be. Yeah, I thought about that. It's a little bit of a play on words because like I like that the acronym, do it yourself kind of thing. So it really plays in with the ditch your fun, but it's a way to kind of empower yourself to be able to do this kind of thing. Yes, you can do it. So they have plenty of tools online to, how to build, or how to tile a roof or things like that. This is kind of like the same idea, but it's like, this is how to invest, and there's plenty of things out there to talk about investing. I just try to provide tools to kind of help with that along the way. So the name itself, though, really came from that fact that, like I said, when I was in the corporate world, looking at my 401k, looking at mutual funds, understanding how truly bad they were in normal cases. That's kind of like where that came from. And just like, what, ditch your fund. It's actually a name we came up. I had a group of us. We kind of came up with the name. 15 years ago. So it's been around for a while.
I like it.
Yep.
I kind of want to shift to the future because with everything that's kind of going on politically, there's, major upheavals. You have just recently, you heard Mr. Warren Buffett, the godfather of value investing, if you will. He ditched a lot of Apple stocks, which kind of like changed the market. In the next 10 years, what do you see happening in this space? Because more and more people are trying to become investors because they understand that's where the wealth is. That's how you can make the true quote unquote passive income or passive wealth. Since we saw so many people quadruple their wealth, if you will, since 2020, where do you see the space going, and specifically your type of business, since you're kind of a one uh, 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 an innovator in the space of investing, since there's not a lot of people helping others really understand and simplify the market for us.
So where I see the stock market go in the next 10 years, or are you just talking about the
Let's start with let's go stock market first, because we're currently, you have this a big political situation right now, with Harris and Trump going, and that we know that that's going to affect the stock market, as always when you have two big names going at it. But then I want to know the space, your space specifically, what you're doing and people like you. So let's go with the stock market. Where do you see the stock market kind of going, since we're kind of in this really unique space right now?
Yeah. So I think the stock market, we were on this huge bull run for a very long time. Even after COVID knocked everything down. It came right back up. I think the stock market overall has been overvalued for a while, and that's been and Warren Buffett actually shares that with me. So the idea is that, okay, I believe there's a little bit of a bubble, and I think there's going to be some corrections coming. Personally, I think people get very much into FOMO when it comes to especially any kind of exciting stocks. I look at Nvidia, for example, things like that just they explode. And understandably, because this is a new technology, but I think we did the same thing in 2000. We had, this is the latest, greatest thing. The internet's going to, change everything, and everyone's going to be a billionaire. And I think people get excited about those kind of things. But the problem is that there's not an economy to support that all the time. So you have to take things with a grain of salt. So I see the stock market kind of like ebbing for a little bit, but I do see it taking off again. I think it's changed dramatically after 2000, because I think technology has really changed the stock market. I think the speed of data to people and how quickly people can ascertain data. You're going to see a lot more. What I've noticed is that the stock market is much more volatile than I've seen it before prior to 2000. So, and I just think that's going to happen. One of the things that I like about what I do, though, which is really value investing, is basically, and I'll quote Warren Buffett on this. In the short term, the stock market is a voting machine. In the long term, it's a weighing machine. So I feel like that's why I like value investing, because it basically eliminates all the noise. You basically just stick with it, and then eventually things just kind of pay off. But you just have to be patient with yourself. I think that is kind of a key determiner for the long term for the stock market. And traditionally, the stock market has always gone up. So over the next 10 years, I don't see anything drastic happening like we've had back in 2006, 2008, and in 2000. So
I like that. With you being a maverick in this space, because I haven't heard many people using software to help everyday people. You're probably the first person I've heard. I've heard people talking about value investing and teaching value investing. I haven't heard someone using software to help coalesce and clear out the noise and look, here's the real stuff that you should interpret. Were you faced with a lot of pressure from others, and like the big market, the big firms kind of getting upset with you simplifying their complex roles?
I don't think so, not really. And I think the reason why is because the area is actually fairly saturated when it comes. If you look online for investing software and tools, there is a ton out there. I am trying to differentiate by simplifying, by being different than these other guys. But I haven't really. I think there's so much out there. I don't think that most people don't really give it any thought. And the other thing too is I'm small, right? So if this becomes something where people are doing very well, then, I may raise eyebrows down the road. But unfortunately, with value investing, it takes time because it's not a 2-week thing turnaround. It's like years. It takes years for people to kind of see the fruition of their choices. So
I'm curious with what you're doing. You're an expert in software. How did you invest, if you will, in yourself to become more knowledgeable about the stock market? Were there books? Were there courses?
yeah.
Was there someone specifically that you followed? And this person, I understand Warren Buffett, obviously the godfather of value investing, but was there something more that you did to invest in yourself and that our listeners can kind of follow along and do the same?
Well, actually, it kind of started out with a guy named Phil Town. Phil Town wrote a book called Rule Number One. So what this book laid out was basically a recipe for how to invest, use value investing and how to invest. It's very simplified, and I, having gone through it, I realized that it's a little oversimplistic sometimes. But the core is there, basically saying it's buying good companies at a decent price, and that's really what he was kind of laying out. So he's the one that kind of initiated a lot of my other things, and so for me, it was just reading a lot of books. I read Snowball by Warren Buffett, or by proxy of him. And I read about Charlie Munger. I've read all of Warren Buffett's, all of his letters to the shareholders. I mean, these are just gold. And I think, to me personally, just reading is probably the best way to do it. But I highly value books like from Phil Town, because it actually speaks to the average consumer. Another book that I read that I really liked was by what was it? Tony Robbins. He actually has a book called Money, and I just really enjoyed his take on things. And basically, he's the one that talks a lot about mutual funds and how they're really kind of oversold, that kind of thing. So personally, I just did a lot of reading, and I think that really helps, and it helps me educate. And you obviously have to have a passion for things, but for me personally, it helped me kind of gain the confidence to be able to do it myself.
I kind of want to look at your journey so far, because you went from software developer to founding DYF. Were there pivotal moments or challenges that significantly shaped your approach to investing, or was it just, you just put on your boots and you're just like, let's go and see what happens?
Kind of the second one, but I will say this: I was very naive about. So when it comes down to the nitty gritty of actually calculating what, like, someone, for instance, in order to calculate the value of a company, use something called DCF, which is discounted cash flow. Discounted cash flow is not easy. And so I literally had to hire a financial analyst to help me make sure that what I was doing was correct and that it made sense, and kind of help me with my modeling. So that was a bit eye-opening. I didn't realize it would be this hard. I thought it was just something I could look up on the internet and just do, right? But it's there's a little bit of an art form to it, and so I had to have someone help me out with that. So not having some of that background was a little bit of a hindrance, but obviously I was able to bring on people to kind of help me out with that.
We're going to jump again into the future, but specifically about DYF investing. Where do you want DYF to be in the marketplace in the future? What is your grand vision, if you will, for your company? And do you have an exit strategy for this business, or are you going to stay with it for the rest of until you decide to retire, if you will?
So I've been thinking a lot about this lately, actually, because everyone talks about having an exit strategy. You go into something with an exit strategy, and I get that. When I started out, I did not think about that. All I thought is like, hey, I want to create this. I want to create this and give it to the world, kind of thing. That was my passion. But one of the challenges I have is that I actually use a tool myself to invest, and not having that would be difficult. So, making sure that I have something that I can actually use on a daily basis would be personally a big challenge. So I have kind of two successes going on here. I have one of the company itself, and I have one on a personal nature, like me personally using the site, me personally using the data and everything about it to be able to kind of grow my own personal wealth. So my vision really is, I would like to see, like in 5 years, I would like to see us having a community, and we call them ditchers, ditcher fund, we call them ditchers. I would like to see a strong community of people kind of supporting each other, kind of help each other grow, and providing stories, and really just having a bunch of just, really uplifting stories about people that, hey, I started with you 5 years ago, and right now, my portfolio is, 10x, 3x, 4x, whatever it may be. That to me would be kind of like what I really like to see out of this. From an exit strategy, obviously, if someone offered me enough money, I'd probably sell. But it really comes down to but I think, it's funny because my first passion really is investing, and the technology around it. I really love all that. So that's kind of my first passion. And then obviously I really want to make sure that I'm leaving something for people that's worthwhile.
All right. Do you have plans to create new companies, or are you just fully focused on growing DYF?
Actually, I think the only other company I would kind of create at this point would be a hedge fund. I think I'd like to do that. I think that would be interesting for me to see how that, kind of create something inside of just to help kind of create, compound some money on the side. So that to me kind of seems like my next adventure.
Are you excited, or are you hesitant to do that? Create your own hedge fund, because it's a different beast than what you're doing now.
It is. Obviously, my portfolio, I've been managing it for a while. I understand it. I manage my wife's, some friends. I kind of help them. But we're talking kind of a different scale. But I'm kind of like, I feel like what I'm doing is I'm getting all the things in place in order to be able to do that. But I'm looking forward to the challenge. So, and honestly, as much as I love software, I've been doing it for almost 30 years now. So it's getting a little burnt out of that. So like, to me, I love technology, but I would love to be able to kind of like, I like to be able to focus more on the investing side.
I love that. As we're winding up here, I would love if you could possibly give us maybe some practical tips for individuals who are looking to take a bit more control of their investments, but who could be overwhelmed by that complexity of data analyzing. Where would you tell them to start?
Well, my first suggestion would be that I'm a big fan of just index funds. Like if you don't really want to be involved, but you want to have better returns, I think your best bet is to just put your money into a low cost index fund, like an S&P 500 or NASDAQ. I like the S&P 500 because it's self-healing, meaning that it's always a top 500 companies, always. And so it just kind of rotates through. And so you're always going to have the cream of the crop within that index. And so naturally you get, I think over the last 30 years, it's done 11.5%. So you get a decent return out of it too. And that's a no brainer. That's without thinking. And then the costs are minimal. I think for me, that's number one. Number two, don't be afraid. I think that people get very fearful when it comes to things like this. And I think that's one of the problems, is because one of the reasons why value investing works is because people tend to be fearful, which then causes stocks to drop, which then makes them a value opportunity, which gives me the opportunity to buy that. So, I think, try to, emotions is that's actually a part of what we're trying to do too, is my wife's actually a psychologist. And one of the areas that we were working on together is trying to really kind of create a set of a curriculum around helping people deal with the emotional aspect of trading and investing, because it is an emotional thing. So I think so. The two things I would provide for people is like, hey, look, one, I highly recommend index funds because it's a no brainer. It's easy. I think you tend to get better returns without all the fees. And number two, try to really step into your fear.
Yeah, stepping into the fear is where the growth is, the uncomfortableness, and where you get to learn the most about who you are and what you know. Right. As we're wrapping up here, Bryan, which I'm disappointed because I'm enjoying this and learning from you, is as someone who is still learning about the stock market, I love that I now have this connection to something that can help me grow my portfolio. What advice would you love to be able to pass back to your 10-year-old self to help your 10-year-old self become a better version of yourself?
Yeah, I'm going to get a little personal here, but I think, insecurities are really kind of, and I think for a lot of people, I mean, this is not just me, but insecurities, not feeling good enough, those things that I think plague a lot of people. And if I was to have any conversation with my 10-year-old self, I was like, you know what, believe in yourself. You're good enough. You can do things. You can make a difference. And just believe in yourself. And I think that is key, because I honestly think the best relationship you can have with anyone is with yourself, because I think every other relationship you have stems from your relationship you have with yourself.
Love that. Great advice. Bryan, I'm going to jump off stage here. I want you to let everybody know where they can find you, where they can find DYF Investing, so that they can start taking control of their finances, their financial future with the stock market and investing. So the floor, sir, it's yours.
Yeah. So DYFinvesting.com. It's DYFinvesting.com, all one word. That's basically our marketing site. And then we have an app after that. So we have a free sign up right now. You can feel free to sign up. Just check it out, and look forward to talking to you on our blogs.
Excellent. Bryan, I want to thank you so much for being here. It was a pleasure chatting with you and learning about DYF investing and your journey so far in this entrepreneurial space.
All right. Thanks, Phil. Much appreciated.
To my audience, make sure you check out the show notes down below. All the links to Bryan and DYF Investing will be there, so that you can start taking control of your investing future. And as always, remember to invest in yourself.
Thanks for tuning in. Now it's time to take the next step. When you're ready to dive deeper into how to launch, grow, and monetize your podcast, Phil's got something special for you. Join him for a free webinar where he'll reveal the 3 secrets that have helped countless entrepreneurs succeed in podcasting. Click the link in the show notes to save your spot, and let's turn your podcasting dreams into reality.
You just realized your business needed to hire someone yesterday. How can you find amazing candidates fast? Easy. Just use Indeed. Stop struggling to get your job post seen on other job sites. With Indeed sponsored jobs, your post jumps to the top of the page for your relevant candidates, so you can reach the people you want faster. According to Indeed data, sponsored jobs posted directly on Indeed have 45% more applications than non-sponsored jobs. Don't wait any longer. Speed up your hiring right now with Indeed. And listeners of this show will get a $75 sponsored job credit to get your jobs more visibility at Indeed.com/kidsandfamily. Just go to Indeed.com/kidsandfamily right now and support our show by saying you heard about Indeed on this podcast. Terms and conditions apply. Hiring? Indeed is all you need.